Hey folks, CB3 here with another live update. Today is Monday, September 30th. We have made it through the month of September. Barring a really ugly day today, we're going to be up for the month, which is against the actual trend of the last 70 years. And that's a good thing. Got a lot of exciting things to talk about for this quarter up ahead. CB3 Live Update begins now. So as we enter the final quarter of 2024, I would say the stock market looks, well, cautiously optimistic, and here's one of the reasons why. It certainly appears in the polls that Harris has the lead right now over President Trump, and yet it looks like the Republicans are going to take the Senate, and that is a very positive thing. Why? Because it's mixed government. And overall, if you look back over the last 70 years of market performance, markets like split government, meaning one party has the House and the Senate and the other party has the presidency. That certainly could play out in 2024. We will see. But right now, I think the market is factoring in a split ticket. That's the way that I see it. So the major U.S. indices are going to probably end September, again, as I said earlier in the intro, up for the month. The Dow, as we head into Monday, September 30th, today is up 1.5%, the S&P 1.6%, the NASDAQ actually up 2.5%. So this is 3 consecutive weeks of gains for the major indices, extending the recovery from a sharp drop earlier in the month. We began September in typical fashion, but we're ending it in atypical fashion to the upside, which is a good thing. And a notable development I'm seeing is the broadening rally of the market. Okay, so this means more than just the top 7 stocks, the Mag 7 as we call them, right? Although I've really redefined that to be the Magnificent 8. We're actually including Berkshire Hathaway in the DS program, so we have the Mag 8 now. So over 60% of the S&P stocks have outperformed the index this quarter compared to only 25% in the first half of 2024, and that is substantial. That means there's broadening participation for more stocks, and that's what we want to see to sustain a secular bull market. 7 out of the 11 S&P 500 sectors are outperforming the broader index this quarter. That's the best number this year. And I like seeing that, as I just said, because I want to see more stocks participating to the upside. We're seeing this as a healthy sign, and I really like it going forward into the fourth quarter as we expect the volatility to increase as we approach the election day of November 5th. So what are the key economic events this week? ISM manufacturing, that's tomorrow. ISM services on Thursday the 3rd, and then Friday, of course. September, the jobs report. I think most people are seeing, at least the economists that I follow, expecting about 144,000 jobs added and an unchanged unemployment rate at 4.2%. We will see. So while this optimism persists, here are some factors that we have to watch. Remember, September is the worst month performance-wise in the market, but the most volatile month is October. You can go back to the October crash of 1987, certainly 2008. We'll see if this October is that way. And again, it could be driven by geopolitical events, what's happening in the Middle East, obviously with Israel stepping up its attacks on Hezbollah, and of course the political climate here in America. So again, expect volatility because it is October. It's an election year and it's the last full month before the election. Geopolitical tensions and even labor market concerns because of this potential strike that's happening in the shipping industry on the East Coast. We'll see if that has any effect on the markets. So the Mag 7 tech stocks are expecting to see earnings growth of about 20% in quarter 3. All right, that's compared to 2.5% for the rest of the S&P 500. Now, this bodes really well for our DS program because obviously Mag 7, Mag 8 stocks are what's primarily in there, along with some AI stocks that I carefully choose and rotate in and out from time to time. I still see potential growth in the defensive sectors like utilities and healthcare and some of the other defensive sectors that are in the GI program because, again, that's more growth and income. So as we head into the final quarter of 2024, as your portfolio manager, I'm going to remain vigilant and prepared for all kinds of market fluctuations for all the reasons I've just mentioned. And we'll be watching for fundamentals and earnings, of course, as we always do. So that's the update for today. You guys stay with us this week. I'll be tweeting every day. We have a full show 10 days from now, and I'm sure there'll be a lot more to talk about then. Thanks for listening. We'll see you next time.